Hey everyone, welcome back to the Online Investment Compass. Have you ever asked yourself the question, what is online investing? Have you ever heard people talking about investing online and felt completely lost? Maybe terms like stocks, ETFs, or crypto just sound like a foreign language. You're not alone. The world of online investing can seem really overwhelming when you're just starting out. There's so much jargon and so many options. That's exactly why we made this video. We're here to break down what online investing is, how it works, and how you can get started without feeling completely swamped. We'll cover the basics, show you the steps, and even point out some common mistakes beginners make. Our goal is to demystify the process for you. By the end of this guide, you should feel more confident about taking your first steps. We want to empower you to start building wealth in a smart, informed way. So let's dive in and make online investing accessible for everyone. At its core, online investing is simply using the internet and digital platforms to manage your investments. Think of it as your personal investment hub, available right from your computer or phone. It involves buying, selling, and keeping track of various types of investments through an online brokerage or platform. You don't need to call someone on the phone to place an order anymore. These investments can range widely. You might invest in stocks, which are shares of companies, or maybe commodities like gold or oil. There are also things like ETFs, which are baskets of different investments, and even cryptocurrencies like Bitcoin. We'll talk more about these later. The key difference from traditional methods is the direct access and speed. Instead of going through layers of intermediaries, you interact directly with the market through the platform. This makes the process incredibly fast and convenient. You have the power to make decisions and execute trades whenever the market is open, right at your fingertips. It also gives you full control over your investment choices. You decide what to buy, when to buy it, and when to sell it. So why are so many people turning to online platforms for investing? There are several compelling reasons, especially for beginners. One of the biggest is accessibility. You no longer need large sums of money to start. Many platforms allow you to begin investing with very small amounts, sometimes as little as $10 or $50. This lowers the barrier to entry significantly. It means almost anyone can start their investment journey, regardless of their current financial situation. Another major benefit is control. As we mentioned, you are in the driver's seat. You research potential investments and make your own decisions based on your goals and risk tolerance. You don't have to rely solely on the advice of a traditional broker, although professional advice can still be valuable. Online platforms put the power back in your hands. Transparency is also a huge plus. Online platforms provide real-time data on prices, market movements, and charts. You can see exactly what's happening with your investments and the broader market 24/7. This constant access to information helps you stay informed. You can track performance and understand the factors influencing your investments. Many platforms also offer fantastic learning tools. They provide free educational resources, articles, webinars, and even demo accounts. These resources are invaluable for beginners. They help you learn the ropes, understand different investment types, and practice strategies without risking real money. Ultimately, online investing has removed many of the traditional gatekeepers. It has opened up financial markets to a much wider audience, democratizing the ability to invest and build wealth. It's about making investing less intimidating and more achievable for everyday people. When you start investing online, you'll encounter various types of assets you can put your money into. It's important to understand the basics of each. Stocks are perhaps the most well-known. When you buy a stock, you're buying a small piece of ownership in a company like Apple or Tesla. The value of stocks can go up if the company does well, offering potential for growth. However, their value can also go down. ETFs, or exchange-traded funds, are like a basket containing many different stocks, bonds, or other assets. When you buy one share of an ETF, you're instantly diversified across all the assets in that basket. This makes ETFs a popular choice for beginners. They offer diversification, which helps spread risk, without requiring you to buy individual shares of many different companies. Commodities are physical goods, such as gold, silver, oil, or agricultural products. Their prices are often influenced by global supply and demand, economic conditions, and geopolitical events. Investing in commodities can be a way to diversify beyond stocks and bonds. However, their prices can be quite volatile. Cryptocurrencies like Bitcoin or Ethereum are digital assets that use cryptography for security. They operate on decentralized networks, typically blockchain technology. Cryptocurrencies are known for their high volatility. They offer the potential for significant returns, but also come with substantial risk. For beginners, the best advice is often to start with investments you understand. Don't feel pressured to jump into complex or highly volatile assets right away. Many beginners find it helpful to start with well-known stocks or diversified ETFs. As you learn more, you can explore other options. Getting started with online investing might seem complicated, but it can be broken down into a few simple steps. Step 1 is choosing an online platform or broker. This is where you'll open your investment account and manage everything. Look for a platform that is regulated and has a good reputation. Consider factors like fees, the types of investments offered, and whether they have tools and resources for beginners. Reading reviews and comparing different platforms is a good idea. Find one that feels right for you and your needs. Step 2 is opening an account. This is similar to opening a bank account. You'll need to provide some personal information and verify your identity. This usually involves providing identification documents like a passport or driver's license. The process is typically straightforward and done entirely online. Step 3 is funding your account. Once your account is open, you need to deposit money into it so you can start investing. Most platforms offer various ways to do this, such as bank transfers, debit cards, or sometimes even e-wallets. Choose the method that is most convenient for you. Step 4 is choosing an investment. This is where your research comes in. Based on your goals and what you've learned, decide what you want to invest in. Start with something you are familiar with or have researched thoroughly. Many platforms offer research tools and information to help you make informed decisions. Using a demo account, if the platform offers one, can be incredibly helpful at this stage. It allows you to practice buying and selling with virtual money before using your real funds. Step 5 is buying the investment. Once you've chosen what you want to buy and decided how much to invest, you execute the trade through the platform. You'll typically specify the asset, the amount, and the type of order, like a market order or a limit order. The platform then processes the transaction. Step 6 is monitoring and learning. Investing isn't a one-time event. After you've made your investments, it's crucial to monitor their performance. Keep an eye on how your investments are doing and stay informed about market news. Continue learning about investing strategies and different asset classes. Online platforms make monitoring easy by providing dashboards and real-time updates. Continuous education is key to becoming a successful long-term investor. As you start your online investing journey, it's helpful to be aware of common pitfalls that beginners often fall into. Avoiding these can save you time, money, and stress. Mistake number 1 is investing without a plan. Don't just randomly buy assets. Think about your financial goals. Are you saving for retirement, a down payment on a house, or something else? Having clear goals helps you choose appropriate investments and stay disciplined. Mistake number 2 is chasing hype. It's easy to get caught up in the excitement around certain stocks or assets, especially with social media trends. Avoid making investment decisions based solely on tips from online forums or friends. Do your own research and understand why you are investing in something. Mistake number 3 is ignoring risk. Every investment carries some level of risk. Never invest money that you cannot afford to lose. Understand the potential downsides before you invest. Only use funds that are truly discretionary and won't be needed for essential expenses or emergencies. Mistake number 4 is overtrading. Constantly buying and selling investments can lead to significant fees which eat into your returns. It can also lead to impulsive decisions based on short-term market fluctuations. Have patience and stick to your plan. Mistake number 5 is quitting too soon. The market goes up and down. It's completely normal to see the value of your investments decrease sometimes. Don't panic and sell everything the moment the market dips. Investing is often a long-term game, and market corrections are a normal part of the cycle. Patience and a long-term perspective are crucial for navigating market volatility. To set yourself up for success from the beginning, here are a few key tips for new online investors. First, reiterate this important point. Only invest what you can afford to lose. This isn't just about avoiding financial hardship, it also helps you manage your emotions. When you're not risking money you desperately need, You're less likely to make fearful or impulsive decisions during market swings. Second, start small. You don't need to invest a large sum of money to begin. Start with a small amount you're comfortable with. As you gain experience and confidence, you can gradually increase your investment amounts over time. This reduces the pressure and allows you to learn at your own pace. Third, focus on learning over immediate earnings. Your primary goal in the beginning should be to understand how investing works, how the platform functions, and how different assets behave. Don't get discouraged if you don't see massive returns right away. The knowledge you gain is an investment in your future success. Fourth, learn to manage your emotions. Fear and greed are powerful forces in investing. Fear can cause you to sell during market downturns, while greed can push you to take excessive risks during market highs. Develop a disciplined approach and stick to your investment plan, rather than letting emotions dictate your decisions. Fifth, think long-term. The real power of investing, especially in assets like stocks and ETFs, comes from compounding. This is when your earnings start earning their own earnings. Compounding takes time to work its magic. By investing consistently over many years, you give your money the opportunity to grow significantly. Remember, consistency is often more important than trying to time the market perfectly. Regular, disciplined investing, even of small amounts, can build substantial wealth over time. So, there you have it. Online investing is not some mysterious, exclusive club. It's a powerful and accessible gateway to building wealth for anyone willing to learn and take action. It's simple to get started with the right platform and approach. And it becomes incredibly powerful when done correctly and consistently over the long term. Take your time to choose a platform, start with an amount you're comfortable with, and commit to staying informed and learning. Don't be afraid to make small mistakes along the way. They are part of the learning process. The important thing is to start and keep going. As you gain experience, your confidence will grow. You'll become more comfortable navigating the market and making informed decisions that align with your financial goals. If you found this guide helpful, please give it a like and subscribe to the channel for more videos like this. Let us know in the comments what other investing topics you'd like us to cover. This is Online Investment Compass, helping you invest smarter, one step at a time. Thanks for watching, and see you in the next video.